welcome to the Mortgage Rate Weekly Market Update for the week of July 17, 2017. Hello, I'm John Thomas with Prime Residential Mortgage here to give you an update. Well, last week was finally kind to mortgage rates. After several weeks of moving higher, mortgage rates were able to find a way to actually move lower last week. Take a look at the bond chart on the screen. You can see the last couple of weeks, mortgage bonds have been selling off. That's been the short-term trend for them to sell off, moving interest rates higher. And then last week, they're finally able to find a floor of support and rebound off of that and move higher. Now, on mortgage rates moved higher, and then Friday, they did spike up all the way to a tough ceiling of resistance, but then were turned lower and sold back down to almost where they started on Friday. That was not a good technical signal because that was a tough, very tough ceiling of resistance, a triple layer of different technical factors, which is making it tough to break through that. So since the bond got turned lower on Friday, and we did get a little bit better interest rates last week, we're going to recommend going and taking advantage of that. Lock in your mortgage interest rate to start the week. Take advantage of the little reprieve we got. I wouldn't recommend floating until we break through that ceiling resistance, because if the bonds continue to get turned down, then they could go back to their to the previous trend of selling off the bonds, moving interest rates higher. So go ahead and lock in. Now, if we dig into the economic news, we saw a reading on inflation last week, which is one of the reports that helped bonds move up. It was the Consumer Price Index, or CPI, for June 2017. It fell 1.6 to 1.6% year over year. It was 1.9% a year ago. It's now 1.6%. So inflation has been trending lower, which is very bond-friendly news. Now, low inflation is going to make it tough for the Federal Reserve to keep raising their short-term Fed funds rate, because if they keep raising that with low inflation, they could stall the economy, put us into a recession. So we may see the Feds put the rate hikes on hold, as if the inflation keeps coming in very tame. And this CPI was the lowest year-over-year reading since October 2016. And then we saw retail sales for June 2017 come out. They were down 0.2% from May. That's the second month in a row retail sales have dropped. So some good news in the retail sales is for June, we're still up 2.8% from June of 2016. So that's still good news there, but 2 months of lower retail sales is not good. If we dig into the report, the Commerce Department reported that the sales were down because we had down in department stores, food stores, and gas stations. Now, retail sales are one of the big indicators on the economy, so if they keep trending down, that could mean the economy is slowing down, and that would not be good news for a long-term outlook. Then we saw weekly initial jobless claims come out on Thursday. Claims dropped 3,000 to 247,000 claims for the week. That's a very strong number for jobless claims. That's the 123rd consecutive week of jobless claims below 300,000. That's a 47-year record. So that is great news there on the labor market. Very strong labor market. A lot less people filing for initial jobless claims. People that want a job are having a very good time of finding a job. It's a very good labor market right now. Some employers are saying they're having a tough time finding skilled employees to fill positions. Now, in the housing news, CoreLogic released its home price index for May 2017, which showed home prices were up 6.6% from May of 2016, and home prices were up 1.2% from April to May of this year. Now, the big thing that's driving home prices up is tight inventories across the country. Not a lot of homes for sale. A lot of buyers that want to take advantage of this hot real estate market. So that's going to keep pushing home prices up. CoreLogic is predicting on a national level the home price appreciation from May of 2017 to May of 2018 is going to be 5.3%. So that still makes it a great time to get out there and buy a home, take advantage of this equity appreciation and the tax advantages. So it's a great time to buy. Then CoreLogic released its loan performance insights for April 2017. Great news there. It showed loans that are 30 days or more past due dropped 5.3% in April of 2016 to only 4.8% in April of 2017. And then it's also in the report, serious delinquent loans that are foreclosures dropped from 1% last year to only 0.7% this year. And they're also down 0.1% from March, which was 0.8% in foreclosure, down to 0.7%. So the report shows, again, housing is very strong. Mortgage loans are performing better. So as home price appreciation goes up, it usually fixes a lot of problems with housing and mortgages. So great news there on mortgage performance and the home buying market. Now, if we look at the local news, the next first-time homebuyer seminar is actually this Saturday, July 22nd from 10 a.m. to noon in Newark, Delaware at the Christiana Hilton Hotel. There's still room to attend, so if you want to register, give us a call at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.